Hey guys, it's Sasha. Lucid Motors has just announced their first ever quarterly result as a public company, and this morning the share price has gone up even higher, up over 5% to $47.20 as I'm recording this video. And so I thought we should talk through what's happening with Lucid, talk through the results, and discuss some really interesting updates. I'll also share my view on Lucid stock and where the company is headed, but first, let's talk about the results. Lucid released a quite nice presentation for the results, actually borrowing another great trick from Tesla, and I really wish more companies would do the same, would just try a little harder with the information that they present for these quarterly updates, because this not only looks nice and is not only just easy to read, but it also has quite a lot of useful information in there. Now, a lot of the information in this presentation, and especially information that was shared on the investor call afterwards, after the trading hours yesterday, is not new. So I won't be discussing things that you probably already know or you might have heard recently, details of, the Lucid Air EPA certification of 520 miles, their Formula E proven battery technology, and all of that mumbo jumbo. I'm going to give Lucid a pass for this being their very first quarterly update as a public company, but hopefully they're going to be a little bit more specific and a little bit more substantial, talking about the current goings on in future updates rather than just repeating the same thing. Let's see, one bit of news that Lucid made a really big deal out of in this update was their pre-order numbers. This seems to be the be-all, end-all for every EV company, and everyone seems to be completely obsessed with how many pre-orders each company has. Lucid said that they have 13,000 pre-orders as of the end of September for the Lucid Air, and that went up to over 17,000 pre-orders by yesterday. And that is a great result. They went up from 13 to 17,000 in just a month and a half. And when the data was first published, with that as one of the leading new bits of information, and when Peter Rawlinson then spoke about it at the beginning, the aftermarket share price for Lucid spiked. Remember, Lucid is aiming to make 20,000 cars next year, so this data shows that they should easily be able to sell all of them. But here is the issue. I don't think most people who have studied the Lucid Motors, the business model, and the product in any kind of depth really had a question mark around whether the demand issue is an issue at all. Most people, I don't think, really had a concern with whether they're going to be able to sell the cars. At this low run rate, there's going to be plenty of buyers for their vehicles. These new EVs are so far ahead of any ICE car that every car Tesla, Lucid, or any other serious EV company makes will be immediately sold. That's the situation we're in. So it's nice to see that the numbers are there, but to me, they don't really prove absolutely anything. They are almost irrelevant. The problem for Lucid will be scaling their manufacturing. Making a small production run of cars on one production line, where a lot of the processes are very manual, is a very different game to fully automated, very high-speed, large-scale manufacturing of multiple products on multiple manufacturing lines. An entirely different game. And that's where the next important point in this update for me was. Not that anyone seemed to notice, because I didn't seem to listen to many people talking about this. I didn't see this mentioned in the news reports. Everyone kind of stopped reading after the first couple of slides, I think. In the summer, Lucid announced that they are fast-tracking a lot of their capital expenditure that they were planning to do in 2024 and beyond to timelines up to 2023. And this fast tracking will allow them to build the additional factory buildings in the Arizona AMP1 facility, and I've actually already started that construction project. This will do two things. They want to expand the factory on production from 30,000 that it is right now up to 90,000. And that 90,000 includes the Lucid Air and the new Project Gravity SUV that Lucid wants to launch in 2023. So this not only increases capacity, but allows them to launch a whole new model as well. Now, in the Q&A, some questions were asked about this Gravity project, but the responses for me were really pretty vague, and I didn't feel assured at all. Peter said in the presentation that they plan to release and start selling the Gravity by the end of 2023. But then later, when he was asked when the first designs might begin being shown, he said it would probably be end of the next year as the earliest possible target. And for me, that doesn't sound great, because that only leaves up to 1 year from when they reveal the car for the first time to those cars rolling off the production line of the factory that hasn't even had the foundations laid yet and being sold to customers. And that is a very, very tight timescale. Even Tesla has not managed to do that with the factories that they've been building. There are so many steps in between showing the car, having a concept that people can go and look at, and that car being in customers' hands. And I suspect that Lucid won't be sandbagging the timelines. I don't think they already have that ready and they're just not showing it. I suspect that given their position as an early stage growth company, they will probably be showing off that new car as soon as it is remotely ready to be shown. And here is the really important bit that is to do with this, the numbers. The profit and loss statement for Lucid Motors is basically irrelevant. The company earned $719,000 in the whole of 2021 up to the end of September so far. Basically zero in the grand scheme of things. That's absolutely nothing. But now we get to see the effective starting point for Lucid in terms of their balance sheet. And this is where it gets interesting. As of the end of Q3, Lucid have $4.8 billion in cash on their balance sheet, and that pretty much is it. There's nothing else really on there of any note. The factory and equipment, which is the only other thing of any size, are basically just sunk costs that is still hanging about on the balance sheet. So the process of going public through a SPAC with that pipe deal on the side has gone and given them that $4.8 billion in cash, and according to Lucid, 4.4 out of that 4.8 billion came from them going public. So great, they have raised money. But here is the issue. The operating expenses for Lucid in Q3 were $500 million. And those operating expenses are only going to increase in the next few quarters as the company is hiring more people, developing and manufacturing, and so on. Q3 costs are already roughly double what they were in the previous 2 quarters this year. So the burn rate is increasing fast and is going to increase a lot faster from here as well, I think. And selling 20,000 cars in the whole of next year is not really going to make much of a dent in that massive burning cash pile. Even if they make a margin of $10,000 per car, that's only going to add $200 million in gross profit. So they spent $500 million last quarter, but their spend is going up really fast. They've been opening up more and more studios and service centers as well. There's just never-ending stream of new costs adding to that pile. And as that number is going to go up, Lucid is currently looking at running out of cash in Q4 next year at the latest. And that is not a long way away. And there was one question in the Q&A related to this. The question asked whether Lucid is planning to issue more shares to raise additional funds, because in order to continue going beyond next year, they're going to either have to raise funds through issuing new shares or borrow money. Those are the two options available to them. And here's the thing, Lucid's share price right now is incredible. Even if you're an investor, that share price of $47 to $48 that it is right now gives them a market cap of something like $77 billion. And for a company that is only hoping to reach a run rate of 90,000 cars per year at the end of 2023, if everything goes perfectly, that is a really great share price. That's really, really high. That question in the Q&A asked if they should perhaps raise more money at this valuation so they can maybe go higher than 90,000 cars or get there sooner. And Peter Rawlinson said that even the 90,000 target is still pretty ambitious. And here's the thing, I completely agree with him. That run rate forecast, remember, is only in 2 years' time from now. And going from basically 0 to 90,000 cars per year in just 2 years is already a ridiculously good achievement if they get there. If. And it's a really big if, because there's going to be a lot of hurdles to overcome for this to go to plan. But the financial issue remains. Sherry House, the chief financial officer of Lucid Motors, said that the company is not currently looking to issue more shares. But she did hint very strongly at the fact that the company doesn't currently carry any debt. And she alluded to a preference for the company to potentially take on debt over issuing new shares more than once on the earnings call. This is why you need to listen to earnings calls. They reveal some really, really important data. And this stance is somewhat unusual when a company is in this kind of position with the valuation that they currently have relative to, where maybe they would themselves expect to be. Raising some capital at this point would often be a very smart strategic move. After all, the whole point of being a public company is to be able to raise money from the public markets as and when the company wants or needs to. That's sort of the definition. That's the whole reason that this whole thing exists. And And when the company went public and we were all buying shares at $17, the people on the pipe were buying at $15. Now, just a few months later, that share price is $47 or $48. And you would think that given the timeline, it would kind of make sense to go and raise some money. But then you go and look at the little update that came out earlier yesterday that didn't get reported as much. And that update was that the Saudi Arabian Public Investment Fund, as of the end of Q3, now owns 62.7% of Lucid Motors. Over 1 billion shares out of the total available pool of 1.62 billion. So this is a pretty unusual situation. Because at the end of the day, that gives them, the public investment fund, a controlling vote and basically the ultimate decision maker in the whole company. And if you were the majority shareholder of a business, in this sort of situation, would you prefer to maybe take on some debt, for the company to take on some debt that you don't have to deal with, and hopefully that debt will be repaid in the next 10 years or so? Or do you want to go and dilute yourself out of your shareholding just after the company's gone public? Shareholding that you've been holding for some time and therefore, you want to continue making more profit on. Well, it looks like we have our answer. Now, I know many investors will actually be very happy with the situation. People really hate dilution. People think it's the worst thing ever. But early stage companies will often thrive because of their ability to access money on the open market. That can facilitate their balance sheet to take them to way beyond 2022. It is money that has never got to be repaid. It is just free cash that you can go and take and then invest in building those production lines, invest in new factories, invest in having those shops that don't cause you to run out of cash. So for me, this is going to be a burning question for Lucid over the next few quarters. I apologize for the obvious burning pun, because $4.8 billion in the bank is great. For this stage in the company's life, it is actually really good. But the moment that begins being spent at $600, $700 or $800 million next quarter, and then the quarter after, and then maybe rising the quarter after that, a certain reality check might begin setting in on what taking a company to scale production is actually going to take and how bumpy that ride is going to be. I currently do not hold a position in Lucid. I held a large position because I bought most of my shares around that $17 mark, but I sold them when the share price hit $41. So as it stands, I am just a neutral observer, and I do not have any plans to invest or open any position in Lucid in the near future at this valuation. But I'm also a massive fan of the product and a massive fan of what they are doing. I really, really hope that they do deliver and we get another great EV company that helps transform the world and help Tesla dispatch the dinosaurs of the ICE age into bankruptcy for not wanting to move with the times. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.